President's trade war with China showing no real signs of ending anytime soon. Already Walmart, for example, has announced it's going to have to raise prices. And now a report from one financial services group warns that the standoff could eventually lead to what they described as widespread store closures. Will it? Joining us this afternoon, Chris Garcia is the former deputy director of the U.S. Commerce Department. Good to have you here.
It's good to be here.
He's now back in the private sector, but we're going to call on his experience in both of these to talk a little bit about this. The notion is, on Wall Street, there's great nervousness right now, uncertainty. The markets hate uncertainty, and we've kind of got that right now. China and the U.S. are both talking tough. Now, there will be a delegation coming over in June to try and work things out. But where do we stand in your view right now?
Yeah, so I think that families, markets, businesses should plan for an extended negotiation period. This is something that's not going to happen overnight. Remember, the fundamental difference is that President Xi of China has no expiration on his term. He's president for life. So the issue at hand is we want a level playing field. We want fair, free, and reciprocal trade. If China can sell to the United States, we want to sell to China, and we don't want barriers, we don't want tariffs, we want no subsidies. These are the real things that we need to make sure we're at the table with the Chinese, and we're actually getting them to enforce these agreements that we put in place.
So far, there's been a lot of going to the corners and not any actual give and take, or at least that we know of right now. But is that sort of how negotiations work?
Yeah, so the Chinese have a habit of kind of kicking the can down the road and extending things because they know a couple of things happen with the United States. Number one, we have 4-year terms on our presidents. So we have to maybe reset every 4 years. They know that we're also at a peak in our business cycle. So what they're going to try to do is extend this as long as they can. But remember, the whole reason that we're at this place now with the 25% tariffs on the $200 billion of Chinese goods is because the Chinese made concessions. President Xi got a hold of those concessions, and then he walked them back. And so President Trump said, hey, we expect you to negotiate in good faith. We've been negotiating in good faith for months. We expect you to do the same.
The keeping the pressure on Beijing is important, as you just noted. But the stall ball thing, if I can use a basketball analogy here, because, as you say, it's an election year.
They're trying to run the clock out.
They're trying to run out the clock, and the White House also knows that the Chinese are very sophisticated in how they apply the pressures, and the pressures very often will come in red states, in places that the conventional wisdom is the president has to win in order to get reelected.
Yeah, so that's exactly it. They've been very systematic with which industries they approach, which industries they target. Soybean farmers, beef jerky farmers, alcohol distilleries that export. These are things that we see the Chinese doing. Taking an ad out in the Des Moines Register, for example, talking about how these tariffs are going to hurt families. But what it is right now, I've always compared the trade relationship with China to a really bad contract with your cable provider. You know you're being ripped off. You know you can get a better deal somewhere else. But it's not until you threaten to leave that they finally treat you like a valued customer again. And all of a sudden, they give you a great deal. But except in this case, with China, we're dealing with trillions of dollars, and we're dealing with national security.
We know what we want. What do the Chinese want?
The Chinese want the status quo. They want as much as they can. This is working for them. The entire R&D industry in the United States is at risk. If you're an American company right now and you want to sell to China, oftentimes they will force you to enter into a joint venture, basically turn your technology over to China. Why spend all that money on R&D if the Chinese will just exploit it? Their entire R&D department has been forced joint ventures and forced tech transfer and IP theft.
And we hear that from the White House a lot about this, the theft of
theft
of intellectual property. But I think that's kind of an amorphous idea to a lot of people. Really, what does that mean? What it means is you do the research, you do the development. We've got the product, we have the technology, and now they want in on it.
Yeah, that's exactly it. So if you're a company and you're employing people, you're employing Americans, you invest all this time, all this money, just to have to turn it over to the Chinese market, to the Chinese government, just to sell that to that market, it's really unfair. We don't require that of Chinese firms. Why do they require that of us?
Here's the exit question. We've got these upcoming negotiations. Are you optimistic or pessimistic coming into them?
I think they're going to, again, try to run the clock out. The goal, I think, was to get President Xi and President Trump to have a signing ceremony at the G20 coming up in June. I think this is going to take a little more time, but only if we can form a coalition of the willing. I'm pleased to see Senator Schumer come out and support the president's agenda and his approach, but we're going to have to build consensus on both sides. That's the only way we can tackle this China problem and get them to finally agree to fair, free, and reciprocal trade.
Chris Garcia, thanks so much. Great to have you here.
It's always a pleasure.